What's going on, guys? It's your boy Tyler, bringing you fundamental news on the 17th of April 2023. The dollar bounces as expectations of Fed rate hike climb. The dollar rebounded on Monday and hit a one-month high against the yen as a resilience in core US retail sales and impressive Wall Street bank earnings raised market expectations for an interest rate hike from the US Federal Reserve in May. While US retail sales fell more than expected in March, so-called core retail sales, which excludes automobiles, gasoline, building materials, and food services, slipped just 0.3% last month. Data released on Friday showed in first quarter 2023 earnings from JP Morgan Chase, Citigroup, and Wells Fargo were better than expected, brushing off concerns about a banking crisis that unfolded in March. Against the yen, the dollar rose to a one-month peak of 34.22 on Monday, with the Japanese currency coming under pressure as the Bank of Japan sticks to its dovish stance. Meanwhile, the US dollar index steadied at 101.65 pennies, standing some distance away from Friday's low of $100.78. Friday marked the fifth straight weekly loss for the index, as recent signs that inflation in the United States is cooling have raised expectations that the Federal Reserve would not have to hike rates as much as previously feared. Elsewhere, the euro slipped marginally to $1.0986 pennies, while sterling fell 0.02% to $1.2412 pennies. The US bank earnings came out much better than expectations, which suggests the US economy is not so bad. So I think that will increase expectations for the Fed to continue raising interest rates, said Tina Tang, market analyst at CMC Markets. Money markets are now pricing in a roughly 81% chance that the Federal Reserve will raise rates by 25 basis points next month, up from about a 69% chance last week. So guys, basically it's guaranteed. If they say it's 81% chance, it's basically guaranteed that the Fed is going to raise by 25 basis points in May. Short-term inflation expectations have increased, with the University of Michigan's preliminary April reading showing that one-year inflation expectations rose to 4.6% from 3.6% in March. Inflation is going to stay higher for longer. That's basically what they're telling us from that paragraph. Yields on US Treasuries remained elevated on Monday, holding on most of Friday's jump. The two-year US Treasury yield, which typically moves in step with interest rates expectations, stood at 4.1161% after hitting a roughly two-week top at 4.137% on Friday. The benchmark 10-year yield was last at 3.5166%. Some hawkish Fed speak also aided the higher interest rate expectations, with Fed Governor Christopher Waller and Atlanta President Raphael Bostic suggesting that the Fed could hike another 25 basis points next month. In other currencies, the Aussie gained 0.01% to 69.095 pennies, while the Kiwi, which is the New Zealand dollar, fell 0.19% to 61.985 pennies. Over in Asia, a raft of economic data from China out this week takes center stage as traders look for clues on how the recovery in the world's second largest economy is playing out. We expect March activity data to show moderate growth momentum acceleration, but unlikely to see large positive surprises, analysts at MUFG said. Last week, China reported an unexpected surge in its exports in March, which shot up 14.8% from a year earlier, snapping 5 straight months of declines. The offshore yuan fell roughly 0.1% to $6.8786 pennies. There we have it, guys. Basically, what they're saying is the dollar is going to be strong until the time comes to lower interest rates again.